Okay, now our next company presenting is an IPO opportunity. The company is called Rental Management Investment Trust. We've got the CEO, Stuart Bell, here. Investment into the Rental Management Investment Trust will be primarily used to fund a conditional agreement with the largest residential property management group in Australia, the ASX-listed Run Corp, to purchase the Run property management business. Please welcome Stuart to the stage.
Hello everyone, my name is Stuart Bell and I'm here to present the opportunity to invest in the upcoming IPO of the Rental Management Investment Trust. An investment in the Rental Management Investment Trust is effectively an investment in the business of residential property management. Residential property management is pretty much what the title suggests. It is looking after the property for the owner of the property. That involves all aspects, including all the basic elements, including finding a suitable tenant, collecting and distributing the rent to the owner, maintaining the property and ensuring that the property is looked after. For this, the property manager receives between 6 and 8.5% of the rental, and that depends on each state. Each state is different. They also receive approximately between 1 and 3% for letting fee and inspections. The income is very much secure. The rent is received into a trust account. The property manager receives its fee and then distributes the balance to the landlord or the owner. The sector is incredibly fragmented. It's mainly serviced by local real estate agents, usually as a secondary business to their main business of sales. And as such, there's actually no one dominant player. In fact, if you look at this landscape, you'll see that the average number of properties that a real estate tends to service is approximately 200, which a lot of people are surprised about. Usually most people think it's a lot more, but it isn't. However, the sector is an incredibly large sector, produces about $1.5 billion worth of income to property managers a year. As I said, there's no dominant player. In fact, the largest player is Run Corporation, and we have an agreement to purchase their property management business. And that is about 1% of the total market. So as you can see, it's a very fragmented market. And in most large sectors, such as property rental, you'll find a number, 3 or 4 or 5 dominant players in that sector. Retail, David Jones, Coles Myer. Most industries have dominant players. Unfortunately, this industry hasn't. There has been a couple of attempts to consolidate the industry. However, they have failed, mainly due to the way in which gap accounting treats rental management agreements and the structure that traditional management companies have had. Rental management agreements are treated as intangible assets. So when you purchase a rent roll, the asset is amortized each year. Therefore, you have a decreasing asset on the balance sheet, which is very difficult then to gain loans for the asset and also provide equity for growth. As well as organic growth is treated as well as an intangible asset. In fact, with organic growth, any rental management agreement that is added to the business is expensed to the profit and loss and isn't actually added to the balance sheet. Now, Rental Management Australia Group have a very simple but very ingenious remedy to this hurdle. And that is it's a simple thing, just separating the development company or development function from the management function. And in doing that, you're bringing the value of the properties you manage back onto the books of the company, which provides a terrific platform for growth of the company, which hasn't been seen before. Now, this is the structure. Now, it looks complicated, but it isn't. Oops, I'll just go back here. This is the structure I was just talking about, which differentiates ourselves from previous attempts to consolidate the sector. This is the management company. That acts as the day-to-day property manager that goes out and sources a tenant for the owner, etc., and is the day-to-day management of the properties. This is the development side of the company. They have a number of BDMs that each month will usually provide about 15 added rental management agreements to the rental manager, as well as going out and sourcing and acquiring new rent rolls. The structure, what you'll be investing in is the Rental Management Investment Trust here. For every $5 invested in for every $5 invested in the Rental Management Fund, $1 goes to the Rental Management Australia Fund, and the Rental Management Investment Trust receives 1 share in that company, and they receive 4 units in the trust. That $4 goes back into the Rental Management Company, of which it pays interest back to the Rental Management Australia Trust. That goes back to, is distributed in total, and goes back to the Rental Management Investment Trust and earns 9.25% per annum quarterly to the investor in the Rental Management Investment Trust. You also remember there's $1 going into this out of the $5 into the Rental Management Investment Company or group. This, as it grows, will also be paying dividends. So not only will the investor be receiving a 9.25% distribution from the trust, but they will also be receiving dividends. The IPO is scheduled to list next month, around about the 18th of December. We're issuing 15 million $1 fully paid units. We've already raised $14 million. So there's $1 million to go for the minimum subscription. You receive 1 free option for each unit. As I say, the yield is around 9.25%, in addition to dividends that will be paid by the fund as it grows. Run Corporation is our largest acquisition. That's a $65 million acquisition, and it's in a combination of shares, and they're also taking securities in the RMA fund. Upon that, we will receive roughly 15,000 RMAs or rental management agreements, and we will be the largest residential property manager in Australia with about 1%, as I said, of the total market. Run has very high caliber executives that will be taking on, as well as staff. The growth opportunities are. We will have on all the acquisitions about 17,000 RMAs. We are also in the process, and we have identified about 30,000 RMAs, and we're looking to increase from our existing 17,000 rental management agreements to about 75,000 within a 5-year period, which would be about 3.5% of the market, which isn't very large considering most dominant players in any sector usually have somewhere between 5 and 15% of that sector. The economies of scale are enormous. At the average number of rentals a property manager has, for instance, real estate agents is around about 200 rental management agreements. They break even. As we go to 2,000 rental management agreements, which we will have in each pod, we then earn about $2 million worth of EBITDA. That is because we increase our revenue by 10 times, our salaries only increase by 6.5 times, and the overheads only increase by 3.5 times. Those will be our earnings. We'll be cash flow positive from day one, and this is pretty much the summary of the investment. You can find the PDS at the www.pds rmitfund.com.au. We think it's a terrific investment, and we invite you to apply for subscription. Thank you.